You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the Options Insider Radio Network. Quite a few programs on said network, including well over 100 archived episodes of Volatility Views. And where can you find all of that great volatility analysis, the great guests, the great discussions, debates, all the fun stuff we have cooking on the Vol Views program? Well, of course, the mothership, theoptionsinsider.com. Surf on over and be sure to check out the unusual activity while you're there and the articles and the analysis and the breaking news from the options market, of course. And then while you're done with that, click on the Insider Radio Network tab and bam, there you go. You're off to the races checking out all of the other over a dozen programs on the network. And of course, you can also find it iTunes, Stitcher, TuneIn, pretty much wherever you find your favorite podcast programs. We're there. And if we're not, let us know. We'll make sure that we're on your platform of choice, or you can just be the techies amongst us and just grab the RSS feed and plug it into whatever you like, and then bam, you're off to the races that way as well. And of course, if all that's just too much effort for you, just grab our mobile app available for iOS, Android, and the Fire OS. I still use that myself to check up on a lot of the shows, so it's a fun way to do just that. It notifies you when things are available and all that other fun stuff. So check it out on the Options Insider Radio Network mobile app, available for your platform of choice. And joining me on the old Volatility Views program today, you know him, you love him as the Greasy Meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Greasy Meatball, welcome back to the Volatility Views program. And how has your volatility viewing been going for the past week?
I'm viewing a lack of volatility, but a rise in implied volatility.
Ah, there you go, giving us a little bit of a taste of what's to come. So since we're diving into the meat of it, without further ado, let's keep on going right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, like the man said, this is the Volatility Review, the portion of the program where we break down the week that was from a volatility trading and analysis perspective. And as Mark alluded to, what is a bit of an interesting week from a vol perspective. We saw perhaps the strong rallies earlier in the week and vol perhaps coming off, and now market selling off a little bit today, mildly. As we're recording this, of course, Friday, June 26th, it's a mild sell-off here, fractionally down in the S&P. The NASDAQ taking a little bit of a larger move downward off about 0.75 of a percentage point or so. The Dow actually ticking up, so it's a very, very schizophrenic day here on the old markets. And, of course, VIX Cash ticking to the upside, actually off about half a handle, hovering right around the 14.5 range right now. To give you some frame of reference, some context for where we're beginning our discussion today. And, Mark, as you were saying, a little bit of realized vol creeping in, even as the implied is creeping out. Was that pretty much your take for the week?
Yeah, I mean, not a lot of. We went up, down, and ended up nowhere, and now we've got vol rallying a little bit ahead of this whole Greek deal. Sounds like, the deal's going to get done, but the question is, it sounds like the Tisperis and the Europeans are going to come to the deal. The question is Parliament going to pass it? And, so that'll be, an interesting – this will be a fun weekend to watch because, the Greeks are going to be in a lot of trouble if they don't get this deal done. The Europeans are not going to give them the deal they want, and the deal they're going to get is better than what's going to happen if they default. They will commit basically economic hara-kiri if they really balk at what sounds like not a terrible deal.
Yeah, this is one of those few weekends. We joke about it a lot here on the network about weekend risk. This is one of those weekends where you have quite literal weekend risk, perhaps one of the reasons why we're seeing a vol actually ticking up into the weekend. We don't see that often unless there's a pretty aggressive sell-off, particularly going into a truncated holiday week. People are usually reticent to pick up any vol going into that. Of course, we'll usually see that play out towards the middle portion of next week. But again, sometimes you see people keeping their powder dry going into the weekend ahead of it as well. Certainly not rushing to lift offers and scoop up some vol. And yet we're seeing a wee bit of that today out there in vol land. So you think this is pretty much people just scooping up a little bit of added insurance in case the Greek thing does not come to pass over the weekend?
Yeah, I mean, if it's a relatively simple bet, I do think we get a really nice pop if when the deal is signed. But if not, why wouldn't you buy a 14 VIX into this? Because if the deal does fall apart and nothing gets done, next week could be really, could be the worst week since like October or December. I mean, I don't think that it's really that bad if a deal doesn't get done. But I think that first week after there's no deal is probably a little ugly. Wouldn't you tend to agree?
Yeah, it's usually there's still a lot of devil in the details there, and that's usually being flushed out in those early days. And so there's a lot of vacillations to and fro as they nail down all the exact sticking points. The other thing you mentioned kind of caught my ear as well. It's something I've been noticing, and I've been seeing a lot of other people start to pontificate about as well online. That is indeed that narrowing relationship between the realized versus the implied out there. As we stand right now here on Friday here in SPX land, we're hovering at a 30-day implied vol of about a 13, of course a little bit less than VIX Cash. We've discussed that many times why that is here on the program, and about a 60-day implied vol also hovering around that range, whereas the 30-day realized coming in around a 9. So you might say, oh wow, 4 points of implied volatility premium. That sounds steep. Things are overpriced, and you're technically correct, but compared to what we've seen in the past, we've seen much larger discrepancies, much larger risk premium being displayed, I should say, out there in the marketplace. So dare I say it, Mark, are you perhaps leaning towards becoming a premium buyer yourself going into this weekend or perhaps into next week?
No, probably not. My feeling is everything's a sale until it isn't, and this may be, I think, we saw things get really oversold earlier in the week. That was your opportunity to buy. I think that's been kind of pulled out now at this point.
Yeah, we did see some action, people hitting some vol, particularly in the VIX options. We'll get to that in a minute. But so it sounds like you're leaning on the not sell rather than buy side of the fence.
Yeah, the RVX hit the low of the year earlier in the week, and actually the low of the last 52 weeks. Really was out of whack relative to the other indexes and has since popped back, but that was really interesting to watch. They really hammered the Russell there for a little bit.
Yeah, and yet surprisingly, that didn't really translate into any appreciable volume out there. Open interest in the RVX right now hovering still around that same level it was last time, right around the 60-odd contract level. Usually when we see some type of discrepancy, some type of aberrant move in RVX or RVX versus VIX, it usually translates into some volume. Yet this week, not so much. Seems like all the action, there wasn't a ton of it this week, but all the action there was still focused primarily on your plain vanilla, I hate to say it, S&P 500, a.k.a. VIX Vol. That's where it seems like the lion's share of the interest, like I said, what little there was this week actually playing out. All right, speaking of VIX and VIX volume, what we saw this week, particularly from an options perspective, relatively light volume, at least compared to, of course, last week, which was expiration week, going to be a bit of a high watermark from a volume perspective. But we had started to see a little bit of volume creeping back into the product this week. Not so much. All the sessions back below that all too important 500,000 contract level. Some of them well below it, well under even 250,000 contracts out there. So very light week from an overall VIX options volume perspective. That said, those people who are fixating out there on the calls versus puts dance, that dance continues to be skewed heavily in favor of the calls, in particular, exactly at 3.8 where it was last week, so it hasn't really budged from an overall call to put perspective. We know we debated that a bit on last week's show. Check that out, listeners, if you want to hear more kind of coming in on whether that is perhaps the indicator a lot of people think it is. I know it gets a lot of ink, so we put it in here in the show, but is it really the market mover, the indicator of things to come that some people think it is? Perhaps not. That said, talking about the interest in calls, you remember last week, of course, it was pretty much all calls all the time, call buying, in particular July call buying, to narrow it down. People were just gobbling up VIX calls in July all last week, pretty much every session, almost over 100,000 contracts just in July upside. This week, a little bit more mixed paper, which is kind of nice. We actually saw that skew start to come in a little bit. It was getting, as you mentioned on last week's show, it was getting pretty, almost ridiculously heavy to the upside. Some of the savvier traders out there were starting to take advantage of that, legging into 1x2s where they're buying one, selling two to kind of take advantage of that ever-increasing premium to the VIX upside. We saw someone come in and just do it a little bit more blatantly this week. Actually, I believe it was on Wednesday, blasting out 75,000 of the July 17 calls for 61 cents on Wednesday. So a pretty sizable trade, a little bit closer to the at the money there than some of the other call trades we've seen that have mostly been hovering in the mid to high 20 range from a July call perspective. So this person coming in is being fairly aggressive and pretty sizable as well with their July call sale, obviously hedging against something else, but at least from the options perspective saying, drawing a pretty aggressive line in the sand there for July vol on Wednesday. That said, it wasn't all call sellers this week. We still did see some flurries of call buying, including some weird stuff going up this week. We saw, in particular this morning, actually, looks like a weird time. I guess you can call it a ratio time stupid. We can call it whatever you like. It looked like paper came in and bought about 22,000 of the July 24th for about 27 cents. Also bought 11,000 of the Aug 30 calls for 62 cents. So doing it on a ratio, but buying both, apparently. So they couldn't get enough of that upside love in July, so they migrated it out to October as well, and netting it out for a pretty interesting debit along the way. So if you were worried about where you stood, where this pop was going to happen, they got a bunch near term, they got a little bit less, a little bit longer term, and they're loading up on their upside as well. So not all call sellers, even though some of the more sizable trades we saw this week from an options perspective and out in VIX land were leaning on the call selling side of the fence. Also saw a bit of a funky risk reversal coming in today, about 5,000 of the July 12 half 23 risk reversals going up, paper selling the put, buying the call. So still loving that upside there from that trade as well. So also saw a July 1923 call stupid going up. So a vertical call stupid this time. That was earlier this week, about 12,000 times for about 88 cents. So the net was still people coming in to buy some July upside, as long with some other months thrown in there as well. But it seems like overall, some of that call premium did come in a little bit as people are starting to say, hey, this Greek thing seems to be settling out. Maybe the upside near-term concern isn't as warranted as perhaps it was a week ago, and maybe some people actually taking the aggressive step to hit some of those bids out there. Mark, we've been talking a lot about, the VIX interest in upside from a call perspective. What's your take on the paper flow we've been seeing out there, and in general, the increasing reluctance to gobble up these things at some of these inflated levels, and people actually starting to turn to the dark side and say, hey, I'm actually going to sell some of these crazy calls if you're willing to gobble them up at these levels?
Yeah. I mean, I think that's kind of been the plan. That's good for those that want to hedge, right? The more people that we have to sell, the more we can get toward a fair value. And I think that's kind of better for everybody. It also could be kind of a replacement, like a future type replacement, or maybe who knows? Maybe it's even a covered call, or like something against some S&P puts. You just have no idea. Or somebody that's long a variance swap is looking to create some income. You have no clue what this guy's actually trying to do.
No, you don't know. I mean, obviously, with every options trade, you don't know what people are up to at the end of the day. You can usually intuit it with a reasonable degree of certainty if you've been around the space for a while. But sometimes with VIX options, that becomes more complicated because there's so many other layers of abstraction. Of course, the OTC is typically involved in one leg as well, so that makes things a little bit less transparent, but still a lot of interesting flow cooking around out there. And so not a lot of volume this week, but the few nuggets we could pull out this week were kind of interesting. The risk reversal one's interesting. We have someone writing in, I believe, about VIX risk reversals a little bit later, so we'll be revisiting that topic a little bit later in the show. And Mark, you're talking about realized vol earlier, and how much things are starting to at least exhibit a little bit of vol out there. Your old friend and mine, VVIX, kind of trending a little bit towards the lower end of at least its range for the year. If you look at a chart of VVIX for this past year, it's been I think crazy town is a fair way to assess it. Of course, those spikes, those peaks are kind of aberrant movements, hitting as high as into the 140 range for a while there, but it has some sharp spikes upward over the past year. Right now, hovering at around 85, 84 and a half or so. So hovering towards the lower end of that 52-week range. I know you put a lot of stock into VVIX as kind of being perhaps an indicator of things to come, certainly more than you do VIX call skew. Do you think perhaps that now that we're lurking at these relatively, some might say, sedate levels, is this contrarian in your mind, or are we about to turn here in the marketplace, something big coming down the pike, or are you a little bit more sanguine on VVIX right now?
I think when a deal gets signed, we're going to pop. I really do, and that's really going to be the key, And once the deal gets done, I think we run to 2130 in like in a snap.
There you go. So just waiting for the deal, and then VVIX and VIX and everything else will be off to the races. Are you calling for perhaps your 2% pop earlier in the week, like you did on the show a few weeks ago? Is that coming Monday or Tuesday? 2%?
Maybe. I think if the deal gets signed, we're going to see a one of those big huge days. Yeah. At least one. I
don't want to front run our crystal ball segment, but there we go. A little bit of prediction here at the top of the show. Moving on to the ever increasing, ever mystifying realm of volatility ETPs. We of course have been chatting a lot about the latest addition to that space, the VIX Up, VIX Down product out of AccuShares, kind of giving our insight into that and what's been going on. Saying of late, of course, it has been doing some volume. People look a little bit surprised by that. This week, kind of following the lead of the other volatility products out there, and that not a heck of a lot really cooking out there from a overall volume perspective on the VIX Up side, I should say. Most days this week, well under 30,000 shares. It's averaging about 38,000 shares a day of late. You have most days this week well under that level, 12, 13,000, 19,000 day. One day flirting with 30, but that was really about it. VIX Down, of course, is another beast entirely. They knew when they launched it, then they needed to incentivize people to trade that. Seems like so far those incentives not really resonating. It has averaged about 10,000 shares a day, which is That'll be a little bit more than I actually thought. But this week, again, just kind of what we've been seeing out there a lot of late, which is, most days well under 5,000 shares, some days even under 2,000. So not a lot really cooking from a VIX down perspective. Mark, we talked a lot about this product on recent shows. Anything really going on, anything cooking this week that has made you either change your opinion of it or perhaps solidify it, either way?
No, it doesn't work. It's a failed product. It will go the way of the dodo. I'm sorry, Mark. That's just the way it is.
Uh-oh. You're predicting the imminent demise of the VIX up, VIX down product.
I just don't think they're going to be able to keep volume. That huge negative dividend is, it's just going to have to reverse split. Like, why wouldn't I just do VXX? Where, at least I can kind of control what my daily fee is. The fact that fee is fixed is really, I think it sounded interesting, but it's probably a bad idea.
So there you are, right out of the gate. It's a fledgling product, just starting to spread its wings, and you've already consigned it to the dustbin of history, sir. You are a harsh analyst.
Yes, I am.
Well, we'll see. I think we have some listener questions about that if we can get to that a little bit as well. But we'll see. Like I said, we're going to keep an eye on this one. But certainly it is following the lead of the other big vol products of late, which is not really up to a heck of a lot this week. Most people are still playing wait and see from a vol perspective as all that other stuff is cooking out there in Greece. Speaking of Greece, we turn our attention now across the pond. A lot of you have been asking us to talk more about VSTOXX, so we're including it in the rotation this week, and we're going to be, I think, factoring it in a lot more on the program as we look farther afield for interesting other volatility products to add into the mix. We kind of thought the VIX up, VIX down might be it, but still, it's still derived off VIX at the end of the day, so you're still talking VIX. VSTOXX, at least a little bit of a different beast, and we saw kind of an interesting range this week for VSTOXX. Obviously, VSTOXX a lot more sensitive to the Greek issue even than the S&P 500 over here in the States, and they certainly reflected that this week. It had a bit of some interesting vacillation, as you might expect, kind of a spiking higher early in the week and then coming off aggressively as it seemed like things were heading towards an ultimate resolution out there in Greece, getting down to about the 22 range or so. And then as the week progressed and some of those concerns started filtering back into that marketplace, VSTOXX reflected that yet again, vacillating back up to about the 26, even to close to the 27 handle or so range. Remember, we mentioned on last week's show that it hit a 5-month high of 27.75 a couple of weeks ago. It flirted with that level several times again this week. So the level of uncertainty out there from a VSTOXX perspective that this Greek deal is going to get done or get done in any sort of digestible, actually accessible fashion for the marketplace is still relatively high and doesn't seem to be going away anytime soon. Mr. Sebastian, I know you've been watching VSTOXX a little bit more as well. What's your take on the activity you saw out there this week and the movement we saw in VSTOXX, particularly as it pertains to what's been cooking out there in the land of the tasty euros?
VSTOXX, that spread is really wide, and there are a lot of people looking at trading VIX versus VSTOXX that are thinking if this stuff really, if Greece does fall apart, VIX is going to catch up, and if Greece doesn't fall apart, VSTOXX is going to collapse. So either way, the trade looks like buy VIX futures, sell VSTOXX futures on like a 1/10 or 1/9, because VSTOXX is one VSTOXX contract is 100 Vega in euro instead of dollars, so it's really like 110 Vega, something like that. So you get 9 VSTOXX futures against 1 VIX future, and you've got a Vega neutral swap trade.
Yeah, it does seem that there's a clear way that trade is lining up. You're right, and that kind of VSTOXX, obviously the more elevated of the two, but also just in relation to how it's been performing in relation to Greece, probably seeing a lot more that Greek fear playing in. So you're right. If either way, this spread should narrow, probably with VSTOXX coming off a little bit, but also potentially with VIX popping, and so that's where we've seen the flow kind of lining up. It's not often that you see a spread lining up this way where you say, there's a clear and demonstrable way you probably want to lean But it seems like that's the case out here in VSTOXX land. I'll be curious to see as this continues as we go into the weekend, and this obviously resolves, if this widening of a spread, usually that will attract spread traders right now, obviously, who are attracted and trying to capture this differential. If that will translate into any lasting volume. One of the reasons we haven't really featured VSTOXX that much on the show in the past is that it's kind of a light volume product compared to a lot of the big vol products you talk about here in the States. Hopefully, perhaps this will translate into a lot of lasting interest. It won't just be a momentary ARB opportunity, and that's the case. We can certainly start featuring VSTOXX a lot more aggressively here on the program. What do you think, Mark? I think this is kind of a one-off flirtation with VSTOXX on behalf of a lot of domestic traders here. You think this might translate into something? I know there certainly is. It seems like a groundswell of interest amongst the institutional and indeed also the high-end retail vol community for something else to sink their teeth into aside from VIX. The AccuShares thing isn't really doing it for them. So maybe perhaps turning a lot of that attention towards VSTOXX. Are you starting to see that as well? Or you think this is kind of a one-off blip on the radar here?
Yeah, I mean, the issue of VSTOXX is that I don't know why they made it a mini contract, but I think that's if there is going to be a vol contract that works, it's going to be that one.
And I could see the logic behind going mini. Short duration and small contract size have been two of the overwhelmingly popular trends in the options and derivatives marketplace for the past better part of the last half decade at least. So I could see why they kind of embraced that trend over there in VSTOXX land as well. It makes sense. But you're right. If you want to kind of also attract that institutional crowd that's playing very heavily in SPX and in VIX, then you probably want to have something they could sink their teeth into as well, rather than having to do enormous numbers of VSTOXX contracts to get any real Vega under their skin there. So you're right. There is kind of an argument for both. Maybe you have both. Maybe you have a big and a mini. Then you could kind of cater to both audiences. Retail can come in. They could sling their VSTOXX and get the size they want. And then you also have a big, for lack of a better term, that the institutional crowd can get behind to actually move some Vega when they need to. Would that interest you perhaps more if they had a larger size contract?
I think it would interest a lot of people a lot more if it had a larger size contract. I think one of the reasons why people like VIX futures so much is because of the size of the contract. One of the frustrating things about, a lot of people wish they'd do a big options contract, but that'll never happen.
Yeah, they're headed the other way, if anything. They're going smaller. They're going shorter time frame with VIX. And, of course, we're all still waiting and seeing for the VIX weeklies to kind of see how that works into the rotation. And so it doesn't seem like there's a lot of incentive with volumes already shrinking. There's a lot of incentive to put something bigger out there. That's just going to maybe cannibalize some of the smaller volume. I don't see a lot of incentive for that. But smaller, trade more contracts, generate more volume, more transaction fees. I can see the exchanges perhaps getting behind that. Moving a little bit farther afield from the realm of equity volatility into the commodity landscape. Of course, crude continuing its decline from a vol perspective anyway. OVX and OIV both cracking the 30 handle this week, hovering right around 29 and change. Not a lot really cooking out there that's too scintillating from a vol perspective, but still worthy of note that we haven't really seen any major aberrant moves from a vol perspective. It kind of still is this long, slow, inexorable decline here from a crude implied volatility perspective, putting yet another nail in that coffin, Mark, of that Goldman report, screaming to the rafters that everyone had to go out and buy all of that downside vol in crude. If you follow that report, it doesn't seem like that really worked out too well for you, does it?
Well, I'm very glad that I wrote a blog post basically telling them that they were wrong. I don't know if you posted that to the Option Insider, but there's been two different times where Goldman has come out with something silly, and then I've written a blog about it and basically told them how wrong they are, and I've been right both times. So the answer is, basically, if you're keeping score at home, folks, Mark Sebastian 2, Goldman Sachs 0.
This is where I kind of wish...
It's like a Hawks Lightning game.
This is where I kind of wish we had Jared on the episode today, because he's kind of the lone defender on the network of those researchers out there. Obviously, he is one. But you and I tend to take a dim view of a lot of that research. We tend to think it has an axe to grind. I think you can maybe argue that was perhaps the case there. Because if it wasn't, that was a horrible call on many levels. But yeah, he could come here and maybe defend them that they had some higher motives involved in that. Either way, if you were out there saying, I think crude vol is a little bit overdone to the downside, time to load up for a spike, hasn't really materialized. But that said, things are looking perhaps a little bit cheaper than they were. So if you were leaning towards the buy side of the fence and you decided to wait for whatever reason, certainly cheaper now than it was a few weeks ago. That's if you are indeed so inclined. But right now, not a heck of a lot looking to indicate that there's dramatic moves afoot in either direction out there in crude right now. As we move on to our final product category before you guys get to chime in here on the old program out there in rates land. Rates been a bit of an active category from an overall volume perspective on the products out there. Not as much as you might expect from a vol perspective. In fact, some of the more popular products out there like TLT and others that people use to trade in and around the rates, you haven't seen vol out there move a heck of a lot over the better part of the past month. In fact, I think TLT front month or Aug vol hovering right around a 16 right now, which is pretty much where it's been for the last few weeks, and not the last month or two. So it's not a really heck of a lot from a vol perspective. Mark, anything really you're catching your eye out there? I know you love TLT. That's kind of one of your favorite rates products du jour. But across the broad spectrum of rates products, anything really catching your eye from a vol perspective worthy of note this week?
I don't see nothing special, to be honest. I do not see anything.
I love your succinct answers, sir. That's why we love having you here on the program. No, that's of course that's pretty much the gist that was the conventional wisdom out there in rates lands this week. We kind of saw the Fed do their dance recently, and in the wake of that, not a heck of a lot speaking towards imminent near-term movements in that side of the spectrum. The next big meeting coming up in September, so not a heck of a lot really on the calendar between now and then to make rates move and shake as much, unless this Greek thing really does take a very, very horrible turn for the worse. But I don't think that's too realistic. And so without further ado, speaking of things that are realistic and perhaps not, it's time to get to your listener mail. It's time to check in with our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail segment. Like the man said, this is a portion of the show where you guys get to join us here on the old Volatility Views program. Make your questions, your comments, your insights known to us as well as to your fellow Volatility Views listeners. Going to kick things off with a question from Nick J. He writes, "Hey, I tuned in last week for the first time," so welcome to the program, Nick. He goes on to write, "and I heard the discussion on volatility products, and particularly the AccuShares VIX products. I've been intrigued by this product and found your conversation interesting. It sounds like you take a dim view of it and would recommend against me buying shares of the VXUP version. How would you fix it if you could?" Well, Nick, I hope you heard our conversation earlier in this episode, and of course, all of our recent episodes. We've had a little bit of a discussion on the promise of this product versus what it actually delivered. Of course, it was first announced about a little over a year ago, kind of promised as this end-all, be-all solution to a lot of the ills that were confronting volatility products in the space, particularly the contango issue, and they were trying to construct, at least it seemed to me from what they were saying in the early iterations of this product, early announcements, that they were trying to construct a product that helped solve those problems and created a more accessible buy and hold volatility product for retail. And it turns out what they've created is something almost entirely different. I think the devil really caught up to them in the details there. They realized perhaps that was their initial idea, their initial concept. The execution of that is a very difficult beast. That's why I said last week when someone wrote in about what is your ideal volatility product, I said I'd love to see something that tackles that issue, but it may not actually be viable. At the end of the day, there is a contango, there is a time value of money at the end of the day. You kind of can't get around. They kind of built that into the product, like Mark was alluding to earlier in the program, with that kind of standard fee they built in to incentivize the VIX down. They knew everyone was going to be flocking into the VIX up right out of the gate, so they needed to try to maybe make VIX down a little bit more attractive. So they kind of have that standardized fee that accrues to the VIX down as a result, a bit of a reward for trading that product. But again, that makes it an expensive product. And as a result, it's not really suitable for buy and hold trading. It's something they come out and clearly state at the front. You have to really have a very short-term view and understand the mechanics of this product in order to really trade it successfully or even trade it at all. So it kind of didn't deliver on what they initially promised. That said, it does do some interesting things. It kind of is, as we said before, kind of an interesting approximation of a VIX future with some caveats thrown in there. So if that perhaps intrigues you, you want something that kind of approximates that, but in an equities account, then this may be perhaps something you might be interested in, but I don't think we wholeheartedly can endorse you piling into the VIX up right now. Mr. Sebastian, what do you have to say to our friend here, Mr. Nick J? And he wants to know, would you recommend him buying VIX up? And also, if you could fix it, how would you?
I don't know exactly how you fix this. I think if you really want a VIX contract, you do something on, and this is why there might be some hope for the VolX guys. Really, what the VIX is a 30-day variance, a 30-day guess on variance. So, when these guys launch their realized volatility contract, you should, in theory, at 30 days to expiration, it should match the VIX. So that is about as close as you'll ever get. And then, as it gets closer to expiration, it will not match VIX anymore. It'll either be higher or lower based on how much the market's moving. And you'll be able to kind of breed the two of them. But the closest you'll ever get to a VIX contract is maybe that realized volatility contract. Because really, all VIX is the price of a 30-day variance swap.
Yeah, in terms of bringing it back to the VIX up, VIX down, I don't know really what you can do at this point with this kind of unique bifurcated structure that they've created, the kind of set fees. They have a lot of fees actually in there. If you look at the prospectus, there's the distribution at the end of the month, and they settle the funds out between the two things, and they start the whole thing over again. And there's a lot of money changing hands back and forth. Clearly, there's a lot of work done to try to make this thing work, and there's a lot of issues with it as a result. And so it's kind of hard to say how you could fix this particular thing. He asked about the VIX up. I'm assuming he lumps the VIX down into that as well. It's kind of hard to say how we would fix it. They've taken a very unique approach, shall we say, with this bifurcated structure. I'm not sure if you can really do much at this point to fix it, short of scrapping that entire structure. If you do indeed and believe it's broken, and short of scrapping that entire structure and kind of really starting the whole thing from scratch at this point. That said, it's an interesting thing, and we are keeping an eye on it. So perhaps it will find some resonance in the marketplace. Someone will find a unique use case for it, and we'll see some open interest, some trading start to fluctuate out on there. Mark, what if we started to see options on the VIX up, VIX down? What do you think that would be like?
Lord, that'll never happen.
You kind of have it would be an interesting thing to behold. I think I kind of wonder what the
you would have borrowing issues with both of them. I just don't see that those ever being optionable. Not enough volume, not enough flow, not enough money behind it. You just can't get there. It just ain't working. Sorry, guys. I love you. I think they're really nice guys. That's the part that really is frustrating.
Yeah, we like to see swings at the bat here to try to create the ideal volatility product. A lot of people taking swings at that. We haven't checked in with the Nation Shares guys in a while. Of course, they were on the program last year to discuss their pending VolDex product. I think they're having some issues sorting out the underlying with that one as well, and hopefully maybe we'll see some more information about that one sometime in the near future. So if that's your cup of tea from a vol perspective, if you're saying, hey, I really want to go back to old school VIX sans skew, then that may be the one that intrigues you. Of course, we've often maligned VXX. We won't bring it up here again. And of course, as Mark alluded to, of course, there is the pending launch of the real vol products that are coming out of Box and the VolX guy. So we'll stay tuned for that. I think those are probably coming towards the latter portion of this year at the earliest. So we'll stay tuned for those as well. So there are more iterations on vol products coming in the near future for you guys to keep an eye on. If for some reason the current slate doesn't meet your needs, and judging by what you guys send in, it sounds like a lot of you feel that way. The current offerings out there, not exactly what you're looking for. You kind of trade VIX options because it's the big dog. It has a lot of volume behind it, and you can kind of get what you need with it, even though it isn't really ideally suited. So the hunt for that elusive volatility holy grail product continues as we move on to our next question. This comes from a listener, goes by the handle of St. James, kind of alluding to a discussion I believe it was Andrew and I had a few episodes back. Someone wrote in about can VIX ever go to essentially 0 or 1, and what would it take for that to happen. Andrew and I kind of dismissed that notion. It would kind of have to be all things in equilibrium, world peace, all other things being held equal, order flow, making it happen. A lot of things would have to happen that could never really come to pass to make that happen. So we said pretty much no. Our listener, St. James, writes here with a follow-up saying, hey, a question for Volatility Views. How low can the VIX go? You guys said on a recent show that a VIX of 1 was not realistic. So what is a realistic low for VIX? Mark, you and I were both out in the SPX pits. We remember some days when SPX vol certainly was in the doldrums, certainly very, very low. We've certainly seen it flirt south of the 10 handle into the single digits before. So that certainly is a possibility. That said, 1 certainly not realistic. So let's split the difference then. Let's say 5. How realistic do you think a VIX of 5 is, and what the heck would it take for that to actually materialize in the marketplace?
Yeah, I mean, there's no way to have a VIX of 5. You would basically need to have like a full government takeover of every single company in the S&P 500, and it's legitimately impossible. I mean, if you look, even market realized volatility never really gets much below 5%. VIX trades at a 2 to 4% premium. So if you have a market vol of 4%, that gets you to a VIX of 8. And I would say that's probably about as low as we could theoretically go, because when market vol gets to 4, you're going to see that VIX spread be 4 to 6, not 2. The lowest ever was 9 something, and I think that's probably the lower limit is in the 9s. Not much below that.
Yeah, we've seen it flirt a few times. This is, of course, when it wasn't a tradable product, just the old index that they disseminated. I think we hit it on back in 1993, December of 1993, and a brief flirtation there back in January of 2007, both in the mid to low 9 range. And I kind of concur, Mark. That seems to be that maybe down into the 8s is kind of the lower bound from a vol perspective. We talk a lot in economics about a lot of different, transitional structural levels of unemployment and inflation, et cetera. There is a certain level of structural volatility in the marketplace. You just can't get below. Things are moving. Things are happening. There is volatility being exhibited as a result. And with so many products, diverse products in that index, it's kind of hard for that structural level of volatility to ever really get below, let's say, a 5. And in this case, with the premiums we're seeing out there, probably more realistically with the implied vol, probably at least an 8, if not a 9. So let's just lean that way. We could see it if this summer doldrums does play out the way people are thinking. A lot of people are starting to say now we're heading into that weakest time of the year, that post-June expiration heading into the July 4th holiday here in the States. This is historically a very weak time from a vol perspective, of course, the Greek thing notwithstanding. So if that wasn't on the table, we might be flirting with that 9 handle right now out there in the VIX Cash. And we'll certainly see if this weekend, if the deal is struck and all is right with the world, maybe this time next week we may be flirting with that handle going into the July 4th weekend. Of course, we don't want to get into the crystal ball just yet. We have one more question here. This comes from listener goes by the handle Encore. He or she writes, "Hey, I'm a fan of bullish risk reversals or colors in the equity and the index world due to the volatility premium inherent to the puts." Well, I'm with you there, Mr. or Mrs. Encore. One of my favorite trades. He or she goes on to write, "It looks like that similar strategy not as effective in VIX options and most volatility products. The volatility premium is in the calls, so most bullish risk reversals end up costing a net debit rather than generating a credit. So should I take this to mean that I should flip my strategy to employ bearish risk reversals instead of volatility products? Do they tend to be more effective, or are the call premiums merited in volatility products?" Mark, we were just talking earlier in our VIX options volatility, someone putting up a pretty sizable risk reversal today. I believe it was a 12.523, selling the puts, buying the calls. And that tends to be the way we usually do see it out there in VIX land in terms of using. They want to be long that call. That's kind of, as we've said many times, VIX options, very call heavy. The concern, the fear, the speculation, whatever you want to call it, is on VIX popping north, particularly when we're in the lower portions of the range like we are now. Not a lot of people are coming in and saying, hey, I want to just blast out these calls naked and then buy myself some downside puts. Again, what are you buying? You're going to buy maybe a 10 handle put, maybe a 9 handle put. Not a lot of room for VIX to run to the downside, as we just alluded in the last question there. So there's not a lot of incentive when VIX gets down at these levels for people to buy puts and sell calls. There's a hell of a lot of risk. There is reward as well, of course. Those calls are usually pretty rich, particularly now. Not as rich as they perhaps were a week ago, but still fairly rich. So if you do it in a risk-mitigated fashion, maybe you sell a call spread and you buy that put, maybe a little bit more attractive. Mark, what's your take on the bullish versus bearish risk reversals out there in VIX options land, and which one is your preference given the skew and the order flow out there?
Well, I would tell your average retail trader, if you're really interested in trading risk reversals, maybe just stay out of the VIX and dig into doing something like SPY or SPX. Because, one of the issues with, you do a bearish risk reversal or a bull risk reversal in SPY, it's basically the same. It's very similar to doing a bear risk reversal in VIX, right? The issue is, you do a risk reversal in SPY and it tanks. At least you take delivery of something. You do a bearish risk reversal in VIX and it goes off. That thing could go to the moon and then expire and then immediately come back to where it was from, and you're left with cash, with a big huge cash debit. So I'm not as big of a proponent of those type of trades in the VIX market. And so I would just give it the old stay away. I just don't see a lot of utility in doing that trade in VIX.
Yes,
unless you're like an institution hedging. In that case, it makes a ton of sense. But for your individual retail client, I think there are smarter places to be trading risk reversals.
Yeah, that's why that trade going up today kind of caught our eye. We don't see a heck of a lot of those really going up for size out there in VIX for a variety of reasons, some of which we just illuminated. So that risk reversal going up today kind of caught our eye as being one of the more odd trades, hence it went on our list. But a good question. Again, probably if you're concerned about it, what Mark said is indeed accurate. You have that cash issue versus, at least in the S, you can approximate a lot of that without some of the same issues that you see out there in VIX land. So if you're comfortable out there, maybe that's perhaps where, and it's working well for you, maybe you stay in the index and indeed the equity world for the risk reversals, because it seems to be somewhere where you're comfortable and it's working out pretty well for you. So great questions here from everybody. If you wrote in, we don't have time to get to it on the show. Don't worry, we read them. We try to respond to all of them. But keep those questions coming. We love to hear from you guys. Meanwhile, It's time for us to keep on rolling right on into our final segment, the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the program where we prognosticate recklessly and indeed wildly on what the future holds from a vol perspective. We've kind of hinted at it throughout the program here. We've done a poor job of hiding our guesstimates this week, but yeah, it doesn't seem like if indeed the Greek thing comes to pass, who knows what's on the horizon from a overall vol perspective. Like I said, we are heading into that weak part of the year. So if indeed by this time next week, all things appear to be sorted, which is a big if, from a Greek question, then perhaps we may be indeed flirting with some of those lows we talked about before, but that's probably a relatively difficult scenario to tackle. So it doesn't seem like we're going to have all things sorted out from a Greek perspective. Mark, where are you leaning? I know we hinted on it a little bit earlier in the show, but let's say it definitively here. Where are you leaning this time next week, post-Greek deal, or perhaps still in the midst of this turbulence? Where do you think we're floating from a VIX perspective?
What we're going to be discussing, all right? We'll be going into the July 4th weekend. So next week, we're going to record this on a Thursday, I assume, correct?
Probably, yes.
All right. So next week, it'll be July 2nd, my birthday. It'll probably be Andrew because I'll be drinking on my birthday. When you and Andrew are talking, here you guys will say, okay, you'll have gotten through non-farm payrolls. You'll have gotten through this Greek crisis, and you'll be going into the July 4th weekend. Unless non-farm payrolls are something crazy hot or crazy weak, I think you see there's a real chance of a vol implosion, and that's how you see an 11-handle VIX.
Yeah, the combination of the July 4th weekend, not to be overestimated. That's usually a time when they hit the bids as soon as they can. I think we'll see a little bit of that bid hitting delayed into next week. Usually it starts very early, of course, so the Greek thing will have to come to pass and kind of get shaken out first. If that's at least seen to be taken care of by going into, let's say, the Tuesday session, then yeah, bombs away from a vol perspective, because there ain't a heck of a lot. You mentioned the number, but aside from that, it ain't a heck of a lot to really keep people from just hitting those bids out there like crazy. So yeah, you're right. We could be flirting with a dramatically low number. Who knows? In a couple of weeks, we could be testing those breaking into the single digits in VIX and testing a lot of those listener questions about how low can VIX go. Stay tuned, listeners, but unfortunately, that's all the time we have for the Crystal Ball. It's also all the time we have for this episode of Volatility Views. So before we go, as always, let me check in one more time with our cohorts here over there in the land of the pit. See what they have cooking that may interest you, Mr. Sebastian. In addition to your impending birthday, Mazel Tov, sir, what else do you have coming up that may interest our listeners?
We're doing a webinar on July 7th on calendar trading. You can go to optionpit.com/calendar trading.
There you go. Succinct URLs. I like those. I'm a big fan of those. Make it easy for the people to find. So surf on over to optionpit.com/calendar trading to check it out for yourself. Interesting stuff. I know a lot of the rubber really meets the road when we start slinging those time/calendar spreads. It may be worth checking out a webinar or two on this subject. And on behalf of the Greasy Meatball and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in those great questions. Keep them coming. We love to hear what you guys are thinking. You guys really send us off on some fantastic tangents that we never would have thought about if you guys hadn't written in. So keep those questions coming, and we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/The Options Insider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.